welcome to the weekend edition of Your Stocks. Flat as flat can be, that's the only way to describe the market. Nothing has happened through the week, but the good part was that we were well supported by the kind of global cues that we had, and we held on to that post-budget rally that we saw. So up about 1% for the week, but there were many buzzing stocks, so we'll talk about all of that and more.
I think the saving grace perhaps was only that we closed the week with that 5100 mark as the headline number for the index. But very quickly, here's a quick recap really of what transpired over the week. Like we just pointed out, it was a fairly lackluster session for the markets this week. Just about scraped through that 1% gain mark coming in for the Nifty and the Sensex, with the IT and banking index actually holding up. So IT index put on a good 2% in the green.
And the mid-cap index was down about 1.1%, the small-cap index as well. So the entire broader markets didn't do too well this week.
Lots of gainers from the broader universe really. So Jubilant FoodWorks, that relatively newer listing, their 300th store really opened, so up about 11% over the week. Lanco Infra was the other big mover, so almost a 9% gain over the week is what that stock saw.
And let's talk about the index then. Index gainers first up. ITC, it bounced back quite a bit after the drubbing that it got post the budget, up about 6% this week. M&M was another auto stock that did well. On the flip side, HUL was down about 9.5% post that pricing war that took place, and RCom was down about 4%.
The real eyesore, of course, this week was the entire sugar pack. Pricing concerns continue. So Sri Renuka Sugar, that lost about almost 15% this week. Names like Zimbabwe, Dhampur and Bajaj Hindustan, losses anywhere between about a good 11 to about 25% apiece.
And NMDC, it was down about 13.5% this week post that FPO price coming out. That stock was one of the mid-cap losers all of this week.
But very quickly, here's the lineup of analysts on our show. Sajiv Dhawan of JV Capital Services on the fundamentals. Sudarshan, Sukhani of technical trends, talking about your technical queries. And remember, all our guests get only 60 seconds to answer all of their stock queries.
And here is how the list looks on the show today. We'll be discussing a whole host of stocks. They include the likes of HUL, Tata Motors, Bank of Rajasthan, NMDC, Balrampur Chini and many more stocks.
All right, first up, NMDC, the really stock of the week. Almost a 13.5% loss is what the stock has seen. The FPO closed in today, got issue subscribed, or rather got fully subscribed at the end of Friday's trade. Ramesh Bhatt joins in from Gujarat to talk more about that. Hi, Mr. Bhatt, what's your question?
Hello.
Yes, Mr. Bhatt, go ahead with your question, please.
What sort of returns can we expect from NMDC issues?
All right, 300 to about 350 is the kind of average price that you had actually gotten at. 362 was the kind of closing that we saw on Friday. But first, I want to get you in, Sudarshan, on the technicals. After the deep drubbing that the stock has actually seen, poor performance, or rather poor participation really coming in response. Once FPO actually opened, we've just about scraped through. The issue has just about been subscribed. What's the technical call now on the stock?
See, the technical call is that the stock has been falling consistently much before the FPO price was even announced. From a high of 568, it's come down to 360. Now, this is not a bullish stock. There is questions about pricing, about other things, but I don't think this is a stock you want to buy.
Okay, not too keen about NMDC. That's technical view coming in. But Sajiv, what's your call? Does this particular offer excite you?
Well, when the FPO came, we said that at 300 it makes sense maybe to apply for some listing gains. There's been more than enough said about the stock over the last few weeks, and the general consensus has been that the stock is expensive and it has been overvalued. But it has been overvalued for quite some time. It has given investors over a period of time decent returns. It's a great company, it's in a great sector, iron ore prices are likely to remain firm. But I think that the real genuine investors with a longer term perspective would only really be interested probably between 250 to 300 levels, and any rally you have before or after the FPO shares are listed probably will be temporary in nature. I think the government is going to be again very, very disappointed, and as you've mentioned, it's just sailed through, so maybe not the best stock for short term traders considering the overall market scenario.
All right, that's the view coming in on NMDC. Another stock that has got a big drubbing all of this week is HUL. We have a caller who joins in. Diksha joins in from Mumbai. Hi, Diksha, what's your question?
I would like to know if I can enter HUL at the current levels.
All right. She wants to know whether or not HUL is looking like a good bet at this point in time to enter into. Sajiv, what's your call on this one? I mean, it's almost close to its 52-week low, and it's facing this huge price war across the board, and margins are under pressure. Market share is also being targeted at this point. But for someone who's ready to enter into this stock, does this look like an attractive price point, and you think HUL can tide over all of this price war?
Well, you've mentioned all the fundamental points, but our take on this company has been that it is relatively passive and less aggressive than maybe a Dabur or an ITC. We prefer Dabur India in the sector. You've seen the sell-off you've seen in HUL over the last week or so based on the price war. Dabur and ITC have held up, so it shows clearly that the market feels that HUL, because of its size and the way it's being managed generally, is not likely to perform well in the short term. Valuations are not cheap, and that's another reason why probably investors are probably sitting on the sidelines. But if you've got a longer term outlook, maybe 1 to 3 years, then starting to accumulate on significant declines is probably okay. But we'd probably avoid the stock and would prefer investors to look at Dabur India or ITC in the same sector.
So Sudarshan, two questions really. A, of course, if someone's looking at entering into HUL, perhaps this is the best time to just buy and forget. And B, if she is looking at an entry point from the entire FMCG space, would you advise a Marico or an ITC versus an HUL?
Yeah, the first question is, would you buy HUL now? And the answer is no. It's underperforming the broad market, it's underperforming FMCG sectors, it's broken a significant support at 230. I don't think you want to buy HUL at all. Should you then go and buy Marico or ITC or Dabur? My choice would be yes, you buy Dabur and buy Marico and ITC in that order. There is money to be made in Dabur and Marico.
All right, that's the call coming in on Unilever at this point in time. Got another SMS then coming in from T.S. Anand. He writes in from Delhi. He has about 100 Balrampur Chini shares bought at the price of 80. We've seen the kind of drubbing really the entire sugar price, or rather the sugar space has seen all of this week. Most of the sugar counters losing anywhere between about almost 11 to about 25% is the kind of vicious cut that some of these stocks have seen. Sajiv, really first to you on the fundamentals, because of the kind of pricing pressure we have seen. Sugar prices already at their 7-month lows, earning concerns coming in, earning downgrades now trickling in. What's your call on this stock?
Well, sugar's always a sector which is either in the limelight on the upside, sharp rallies, and at the moment it's on the downside with equally spectacular falls. There's been heavy short selling which has been clear over the last few days. Yes, the trigger has been the price fall with sugar at 7-month lows. The managements of several companies are saying that there is still a decent demand, but there are concerns that there might be some oversupply. And when you've got the commodity price at the lows, then I think you're seeing a lot of trading and speculative positions unwind. Personally speaking, after the recent battering, I think it's okay for longer term investors to start accumulating the stocks. The prices have corrected, and there will be some stability and probably some calm over the next week to 10 days. And as the short sellers and people who are trapped in these stocks with long positions get out, I think stocks like Balrampur Chini are probably and are better placed in the whole pack. So start to accumulate and use the declines.
Okay, so he has a buy call on Balrampur Chini. Sajiv, Sudarshan, what's your call on this one? Do you think it's a clear sell for you, considering the way it's been completely battered in trade, and or would you take a call and get into this stock for a longer term?
No. The sugar sector is in a downtrend now. That's very clear. Now, I have no way of making a call and saying, buy today. How do I know today is the low of this downtrend? Nobody knows. And to my mind, it's difficult to say that. My call is, you get out of this. We don't know where this decline will end and when the bloodletting will stop. It could take 6 months. It could take a quarter. So don't make a call. And there is no support. These stocks went up 3 times. They are now absolutely in a vacuum. Just get out.
All right, that's the call. Completely stay off the entire sugar space. That's what Sudarshan recommends. We'll slip into a very quick break. It's been a fairly quiet week for the markets, but lots of individual movers really to talk about. So when we come back, we'll take up your queries on stocks like Tata Motors, SBI, and many more.